A big thank you to all of you that have subscribed to our channel, like and share our video. I cannot appreciate you enough. This gives us enough motivation to keep doing more. With this that you have done, subscribing to our content, liking and sharing it, I can assure you that we are going to give you a whole lot of content, make more forecast for you, and I believe our forecast will be beneficial to your trading progress. Welcome to this week edition of NTFX Trading Weekly Forecast. We are going to start with a dollar index. Of course, I told you last week, dollar index was right at this level. Okay, it was right at this level. And we said that this had made a complete structure. But for us to participate in the sell, it has to break this top, because right here, there is a high here, there is a level here, there's even a gap right here. It has to fill this liquidity. This liquidity has to be filled. So right now, we are looking for a sell, because right here, we have completed a corrective structure. Right here, this up move. This up move from this level to this level had completed a corrective structure. And right here, we have the A, B, and C. This is A, this is A, this is B, this is C. Right here, we want this big move to the downside, this equivalent to this side, we want it here. All right. So but right here, are you supposed to just click a sell for this? No, you can't just click a sell. We want the liquidity at the top here to be taken. As soon as this liquidity is taken right here, then we should be ready to sell dollar to the downside. It can give you something like this, more upside. All I care about, whether it still comes down or not, all I care about for me to sell is for this liquidity here to be taken. Once it is taken here, you have a push down. This push down is the beginning of structure or bearish structure to the downside. After the push, then you look for corrective structure, you sell. Corrective structure, you sell. This is what we want to do with dollar. And of course, you know, I told you last week that my number one indicator as far as forex market or technical analysis is concerned, or analysis of major pairs is concerned, my number one indicator is dollar index. Once you get the direction of dollar index correctly, the probability is there. There's high probability that you get the direction of the major pairs correctly. So that's why we lay more emphasis on the analysis of dollar index. Is that okay now? So what you need to do this week is to wait. Whatever it wants to do, let it break this top. Once it breaks this top, it has taken the right liquidity that is required for the downside. Then allow this bearish move to happen. Once it moves, comes down, breaks structure, wait for the corrective structure and start selling. That is how you should approach your trading on DXY. You know, for 2 weeks now, we have been waiting for it to break this top for us to keep selling down. Of course, you know, when dollar index was here, I did make this forecast for you that it was going to make a move from this level to the upside. And I was even precise, okay, in telling you that it has to take this liquidity, and hit this level. At this level, around 99.5, okay, I'm quoting the price for you, around 99.5 or 100. Expect DXY to make a push to the downside. Okay, when you make that break to the downside, break structure here, let it give you a corrective structure here, all right, before you sell. And there are two corrective structure I love to see, all right. It's either it gives me expanding flat, I sell, or it gives me a regular flat. Okay, a regular flat. Let me show you how a regular flat looks like. All right, give me regular flat up, corrective structure up. All right, from this level, you look for the sell to the downside. That is it about DXY. For euro dollar, of course, you know, euro dollar does the opposite of DXY. Last week, I did tell you that after this move to the upside, All right, you have this corrective structure A, B, and C. All right, we're expecting corrective structure here, one more downside before the upside last week. All right, that was what we said. But what did we see? You see that instead of making that corrective structure, just made a pullback and drop down. All right, made a pullback and drop down. Take liquidity from here. But up till now, we cannot make a buy opportunity. We cannot make any buy opportunity from the current structure of euro dollar, except it readjusts this present structure here. What do I mean? Right here, you have a pullback, you have break of structure. Right here, you have all these. Can make a move like this, break this structure, break this low, take this liquidity and make a push to the upside. This push to the upside is your leading impulse for the up move. It's your leading impulse for the up move. A leading impulse must break structure. That is a clue. A leading impulse must break structure. You cannot call this a leading impulse. I'm going to teach you more of these things today. You have this move here. It's not a leading impulse for the upside. Why? It is not strong enough to break structure. So the corrective structure cannot give us enough motivation to look for buy opportunity. You have to wait for a leading impulse to form. Right now, if this impulse is not enough for us to take our trade from the corrective structure, then what else do we want? What we want is for the corrective structure of this impulse to be neutralized. How will it be neutralized? If you push to the upside and make a break to the downside, it then means that the effect of this sell and the effect of this cell has been neutralized by this. So which means that this structure is complete. All right, or you look at it this way, that this is a running flat. This move to the downside must have to be completed here. Once it is done, and then the next thing you see is a push to the upside. Once you have this push to the upside, the corrective structure is now your trade to the downside. So this just requires a whole lot of patience. You have to be patient with it. This is not something, forecast is not something you do and you rush into it. You have to allow the impulse to form. You have to allow the corrective structure to be complete, all right, before you can take any trade. Sometimes it can take 1 week. Okay, look at euro dollar. For the past 1 week, it has been in this corrective mess. All right, so and we cannot take trade to the upside when impulse is developing inside a corrective structure, or when impulse is developing inside consolidation. So you have to wait until that corrective structure is over, and then you have a breakout to the upside for an impulsive move. It is this impulsive move, the corrective structure will now be the trade to the upside. That is it about euro dollar. So we still have some waiting next week. Remember, Monday is a public holiday in the US. Banks in US will not work. So you have to be careful, because this market may still consolidate more. But to cut the long story short, you have to allow corrective structure to finish. Since we are not interested in the sell, let it break down, break this low. Then from here, an impulsive move to the upside, let the corrective structure develop, and then you buy to the upside. That is it about euro dollar, guys. Pound dollar. All right, so you see in pound dollar, you see that we still want the upside. Last week we did say that we want a corrective structure, 1 month downside before the upside. Okay, what did it make? It just made a crawling move to the downside, and it make an impulsive move. Now after an impulsive move, can you just jump in? No, you have to allow a corrective structure to develop before you jump in. You have to allow a corrective structure. Right now, you have impulse, you have a pullback, you have impulse, you have a pullback. Sorry, let me use another device. This one is not giving me what I want. All right. So right here, you have impulse, you have a pullback, you have impulse, you have a pullback, you have impulse, you have a pullback. All you need to do now is simple. So you have impulse here. This is wave A. Now you are going to treat this as wave B, A, B, and C. Then you have this wave A must be taken. You have a move to the downside before you buy. Okay, do you get what I'm saying now? let me do it clearly so that you will understand what I'm saying. Now, you have an impulsive move to the upside. Okay. Now, you have another impulsive move. All right. You have another impulsive move. So, if this is a corrective structure here, one more upside, then this will be A, this will be B, and this will be C. All right. This will be C. So A, B, and C become a corrective structure. This become a big A big B, and then you must have a big C. So you now have a case like this: up, A, B, and C. This becomes an expanding flat to the upside. This is exactly what I'm expecting. This is the structure I'm expecting from GBP USD. Should I do it for you one more time? Yes. Impulse, impulse, impulse. Can you see a case of three impulses following themselves? So it's just about to form a complex corrective structure in the middle. That's the meaning. All right. You have impulse, impulse, impulse. So what we do is that, how do you know that this is impulse, impulse, impulse? You have V shape here, V shape here. What you do is that at any point in time, there will be a corrective structure. So if this last, the third impulse, make a corrective structure like this, then it must make the next impulse. So if it makes the next impulse, it then means that this A, B, and C become a corrective structure for this big A, big B, and then C, big C. Before this move to the upside, we now continue like this. Do you understand the logic now? That's exactly the structure that is in the making for GBP USD. Are you okay now? So right now, don't do anything. Just be waiting. You see this upside, one more upside. Take this liquidity right here, will fall down before it goes. So when it comes down right here, if you don't know how to trade this wave C to the downside, wait for the wave C to finish its development and then pick a buy opportunity from here to the upside. This will actually be a decent trade for you. That's for GBP USD, guys. AUD USD. AUD USD, guys, you can see all was in consolidation this week. What I would expect is simple. You can see that this cannot be said to be the leading impulse to the upside. Why? It does not break structure. So once it doesn't break structure like that, I don't regard it as a leading impulse to the upside. So what I would rather expect is that right here you have a breakdown, a pullback, a breakdown. So if you have this upside move, then if you have this as a corrective structure, you have one more upside. By the time you complete this one more upside, then you are making a corrective structure, which is A, B, and C for what? For this down move. All right. And by the time you are making A, B, and C for this impulse here that breaks structure, then this move must come to the downside. Equivalent, this move here must come right here, okay, to break this structure. And as soon as you break this low, what do we expect next? It means that the corrective structure is over. Then you now make your move to the upside. Do you understand now? So that's how it will happen. Alternatively, the second scenario that might play out is if this is forming a running flat here, break the structure, cannot break the top. This is a running flat, guys, right here. Okay, so after this running flat, this market is expected to come to break this low right here, so that what you have here, okay, what you have here, you also have here. But in this case, it's not mandatory to come so much further away from the bottom here. Okay, what is required of the structure is for this to come and just break this low. As soon as it break this low, then the structural requirement of completion is done, and then you can have a move to the upside. So if I were you, I will wait to see whatever structure this market want to develop right here. I won't touch it right here. Let it come right here, break this low. Once you break this low, then you are now ready for the upside. This is a much higher probability trade. All right. So USD CAD. You know, last week, I told you last week that USD CAD is going to make a move to the upside to break this top, break this top. There is liquidity here. So you have this down move, you have this. This is supposed to be a corrective structure. You have this down move. This is supposed to be a corrective structure for this down move. Okay, so that you have down, 3 wave in the middle, down. So this upside will now come here, make an expanding flat and goes down. This move down will come this down. Do you understand how I'm cutting the waves now? This is how it's supposed to be. But right here, we're having a slight change in structure on weekly time frame. So you have the down move right here. You have the down move right here. You have another up move. This is a V pattern, all right? So when you have impulse, correction must come along the way. So the correction that we think is forming now is simple. You have down here, up here, down here. So if you have 3 waves in the middle here, then you have the upside here, then you must have upside here to break this top. Okay? So you now have A, you have B, and you have C. And you have your impulse here, then you must have what? Another impulse here. As soon as you break this low, then this move to the upside will now come here. Am I too fast? Am I too fast? Okay, let me repeat this. I really want you to understand how to do this forecasting using wave analysis. Let me do it for you. There is a change in structure, and the structure we are seeing right now is that you have down move, up move, down move. So when the three structures, when you three structure A, B, C, both of all the three are sharp, it is allowed, provided that B is not the sharpest. So, and you can see right here, A is sharper than this B. A is just made up of 2 candles, while B is made up of about 4 or 5 candles. So B is still sluggish. So this is accepted as A, B, and C. This is A, this is B, and this is C. So what happened to this one? Upside. So you must have the upside here. So can you now see that we are now having this structure in the middle, and you have the big A here, the big B here, and the big C here. This has effectively corrected this structure. So this impulse that comes down must now come down right here. Are you okay now? So, and as soon as you break this low, this impulse that goes up will what? Will come to the upside. So this will become, let's say, A prime, B prime, C prime. And then this move to the downside will now continue to the downside here. So you can see right here that we have made a forecast of 1 to 2 years to come. 1 to 2 years to come. That is the power of wave analysis. And you cannot understand this and be in the dark, guys. Okay? You can't understand it and be in the dark. You must know what the next move that is to happen in the market. But right now, which wave are we trading? We are trading this move to the upside to break this top. Okay? So on a weekly time frame, we are to move to the upside. Okay? And if you check the daily time frame, the momentum is clearly to the upside. Can you see? The momentum is powerful to the upside. So what do? I use 4 hours to check my structure. Okay, I use 4 hours to check my structure. Remember, we're here around this level last week when we made this forecast. What did we say? Each time you break structure, expect a 3-wave corrective structure, A, B, and C. From here, go to lower time frame, look for a move to the upside. Now you break structure. What next do you expect? A, B, and C. From here, look for a move to the upside. Right here, you break structure. What do you expect to sell? A, B, and C. So once you make A, B, and C, and this C is breaking the level of A, fantastic opportunity to make a move to the upside. Remember, we have seen from weekly time frame that our direction is bullish. We want to aim at that liquidity. All right, we want to aim at that liquidity. Where's the liquidity? Right here. This level, we want to take it to the upside. So if our aim is to take it, then and you see the momentum on the daily time frame is bullish, then you need a structure in order to continue to buy. Okay, if you just jump in here, it will be at the time, it might be at the time you jump in, that market will begin to make a corrective structure. We don't want to make that mistake. All right, let that be in the past. So at this point in time, we are sure of the directional bias that we are on an upward trajectory. So right now, we want a corrective structure, and corrective structure can only develop after there's an impulsive move that have broken structure either to the upside or to the downside. But in this case now, we are talking to the upside. So right here, you have a break of structure. You will need a 3 waves corrective structure. A perfect corrective structure is a minimum of 3 waves. Okay, what you call a one-way corrective structure is not a one-way corrective structure. It is rather a pullback, and a pullback is just a part of a corrective structure. If you have a pullback here, no matter how long, it's a part of a corrective structure that will make wave A. It's going to make wave A. Expect a sluggish move to the upside as wave B, and then a move to the downside as wave C, before you now buy the continuation to the upside. Why you need to learn NTFX trading wave analysis methodology is that you need to now understand when the size of this A, when this A is formed, how is the B forming? Okay, where you think B should form, another A can be there, which is an impulse. Right here, you have nothing to do, but at each point in time, or at any point in time, corrective structure must develop. So right here, if you have a corrective structure here and you have one more upside, it means that this A wave here is being corrected by A, B, and C. All right, and this A, B, and C become your completion of your B structure, and then you must have this move here, must happen here, boom, to the downside. Once it happens here, then you have a complete corrective structure that you now trade to the upside. Can you see how it is formed? Now I'm giving you a step by step, stage by stage of what we need to see, characteristic of each wave, and where you need to get involved. All right, this is when you have a regular flat inside a regular flat. That's a complex structure. Okay, in fact, I can give you example of a more complex structure than this. If you have an impulse, you have with A, and with A. All right, and at this last with A, you now have corrective structure. This one complete here. Okay, so this one complete here, then this one must come here. After that, then this A must come here. This is a complex corrective structure. All are contained in NTFX wave analysis master course. All right, it will be uploaded soon to the website, and I can bet with you, you will enjoy it. All right, and you will not have any alternative to this methodology for your forecasting techniques. Is that okay now? So that's it for dollar CAD, guys. We are almost 100% certain that you have a corrective structure right here, and then move to the upside. You continue to make that buy at each corrective structure until you take this liquidity existing, resting above here. You must take it for the structure to be complete. And you see, you have like around 200 pips to the upside for USD CAD. All right, for USD JPY, of course, if you have been following our analysis, we made it very clear that this is a breakup structure to the upside. This is an expanding flat. Okay, let me do it well. After this push to the upside, this is A, B, and C. Okay, from this level, we made that forecast that we'll have a move to the upside. We have a move to the upside. I'll keep showing you where the forecast was made. Let's go to Telegram so that I can show you where we made the forecast that will have a move to the upside. Yeah, you can see USD JPY here, guys. You can see where the forecast was made to the upside, because we are dealing with expanding flat right here. Okay, where's the expanding flat? You can see right here, you have a move to the downside, which is with A. You have A, B, and C, which is completing with B, and then you have this one right down, which is with C. So from this level, we have to have this continuation move to the upside. That is it about USD JPY. And in as much as that buy is not complete, we still have to continue to follow up to the upside. That's it about the forecast for USD JPY, guys. So let's continue our forecast. Let's go back to trading view. So right here, what do we expect? What do we expect to see next? How do we approach this trading this week? You know that for you to look for corrective structure before you enter, you have to check out for a breakup structure. Right here, all this consolidation, guys, all this consolidation, let it break structure. Once it breaks structure to the upside, this cannot be a fake out because our primary direction is bullish. So because we have a bullish primary direction, then any break of structure to the upside in that direction cannot be taken to be a fake out. All right. So after that break of structure, you have a corrective structure. You need to have a corrective structure. A, B, and C. It is not this simple. It can take different forms. That is why you must learn NTFX with analysis. All right. Once you learn it, you will know the different form that is about to take. It can come in form of complex structure. This, just as I showed you the other time, this one before it goes. All right. But at this point in time, I don't think USD JPY should come in form of complex corrective structure. A breakup structure, simple three-wave corrective structure is enough for us to start looking for a buy to the what? To the upside. That's it about USD JPY. We are going to break this top, guys. As far as USD JPY is concerned, before any structure, we must break this top. Okay? So next is gold, guys. Gold. So right here, what gold is doing is something that we understand perfectly, guys. So look at it right here. You have after a bullish rally to the upside, you have the wave A, which is very sharp, wave B, and then this is wave C. Some people will just think we are just cutting the waves and say wave A, wave B, wave C. That's why you must learn the techniques. Look at this. Wave A is supposed to be sharp. This one is sharp. Wave B is supposed to be corrective. Three wave, 1, 2, and 3. A, B, and C. This is a complete wave B. And then wave C has to be sharp. 2, 3. So initially we were thinking this would be 4 and 5. But the way it is happening, this will be A, B, and C. This should develop a move to the upside. So what do we expect from here? Okay, it's taking too long in the middle here. So you might expect that this will be a corrective structure for this up move. So which means that if we can break this structure like this, we should look for a move to the upside to complete this wave here. Is that okay now? So what do we need to do? Is right here within a consolidation. All right, it's within a consolidation. I don't encourage you to trade within a consolidation because any impulse within a consolidation within a range is not a valid impulse. Why? Because it does not break structure. If an impulse does not break structure, then the demand zone that creates that bullish or bearish move is weak, because if it is strong, it ought to have broken the structure either to the upside or to the downside. So what do we need to do right here? If you have a corrective structure here, one more upside, take this liquidity here, come right down. From here, guys, take a bullish move, a bullish move to the upside. So this will be up, corrective structure right here, and then upside. Why do we want one more downside, guys? Because you will see that the clue of the size of C, which is here, is determined by what we see in A. All right, A is sharp, B is corrective with 3 wave. All right, then this C should be a bit, even though it's not equal to this, it should be close. So with this one, it's not close, it just merely broke this. So if we can have corrective structure here, one more downside to break this level, then we will see liquidity to make a move to the upside. Why do you think that after taking this low, it has not rocketed to the upside? Why? Because the liquidity that is available below here is insufficient for this market to make a move to the upside. So it has to develop another set of liquidity here, take it up right here before it moves to the upside. So what you need to do is to wait, let this happen. Once this happens and this liquidity is taken, you can now look for a bullish move to the upside, corrective structure, then keep buying, go to the upside. That is it for gold, guys. BTC. So BTC, right at this level, guys, we made a projection that after this impulse, before that, let me show you what BTC is saying on the weekly. All right, from the weekly time frame, you ask yourself, at this level right here, are you supposed, after this bearish move, are you supposed to be looking for buy opportunity here? Of course, the answer is no. You can't be looking for buy opportunity when weekly has pushed so much to the upside like this. You can't. So if you can't look for buy opportunity, then you look for sell opportunity. So how do we get it? And you see it here, you go to daily time frame, you can see the momentum is bearish, and you go to 4 hours time frame. This is where I look for my structure. Okay, I look for my structure here. And what do you see here, guys? You have this move. We took this buy, and we took this sell. Okay, it has broken structure. Okay, it broke structure, it pulled back, it broke structure. Okay, right here we expected a pullback, and I did give a setup. I did give a setup for this pullback, but I expected the pullback to be a little bigger. Can you see proof for this? Yes. I'm going to show you a proof for this. You go to Telegram, you see a proof for BTC. Can you see BTC? Can you see at this level? We said from this level, buy to the upside. So I expected the corrective structure. I expected the push up to be up to this level, but it just stopped at this level, and it made a move to the downside. Okay, that was the forecast for BTC, guys. So let's go back to the chart. So right here, what it did was simple. After the break of structure, it made a regular flat, and from this level, we should make a move to the downside. So how do you get the entry? All right, because I've been doing forecast for you, I've not been adding to you how you enter the trade. Okay, right here, the forecast is complete, the structure is complete right here. So now you now need to wait for impulse and corrective structure for you to sell. You need to wait for impulse and corrective structure. So can you call this one impulse? No. Why? Because every impulsive move is expected to break a structure. Okay, this one does not break any structure, so you cannot call it what? You cannot call it an impulse. Okay, this make a move to the upside, grab liquidity, and this make a move to the downside, break this structure. So as soon as this structure is broken, what next do you need to see? Corrective structure A, B, and C. This is your entry, guys, and this is your stop loss. This is how this trade was caught. All right, for the TP was around here, just for a 1 to 7, I think a 1 to 7 RR trade. It's as simple as that, guys. So what next do we expect for BTC right here? What next do we expect? What we expect is simple. Now you have had another break of structure to the downside. You wait for the next structure that will be created. So the next structure that will be created, if you create impulse, corrective structure, impulse, then this is a correction for this move to the downside. Then from here, repeat the same thing that I did here and take another sell to the downside. Okay, so if BTC will make another move to the upside, let me tell you what will happen. What will happen is simple. You are going to have an opposing impulse like this that will be almost equal to this push to the downside. So once you have it like that, then you have a corrective structure like this. Then from right here, you now make a move to the upside. It then means that this is a reversal here. A reversal is characterized by a V pattern. What do I say? Every reversal is characterized by a V pattern. For instance, you have up, corrective structure, up, corrective structure, up, corrective structure, up. If you are going to have a reversal, you are not going to have a corrective structure here, guys. No, you are not going to have a corrective structure. You are going to have a sharp move. This is V shape, up, down. This is V shape. Then after this, you now have a corrective structure that is equivalent in magnitude to what? The impulse. You cannot have impulse of this side and you're having corrective structure of this side. It doesn't work like that. Okay, so for a reversal, the V pattern will be very sharp, sharp up, take liquidity, sharp down. Why is it going to be V pattern? The reason why we call it V pattern is because this sharp up is no longer a break of structure. It's a grab of liquidity. And once it grab liquid, if it's a break of structure, then you will expect a corrective structure here. But if it's a grab of liquidity, you expect it to grab liquidity, pulls down impulsively, correcting in the same manner, pulls down again. This become a reversal. The same thing I'm trying to explain you here, guys. If this is going to make a move to the upside, then you are not going to have just easy corrective structure here for a drop. What we have is a push to the upside, forming a V pattern here, V shape here, then forming a corrective structure here and another push to the upside. So you are not concerned with this impulsive move. You are concerned with what happened next after this corrective move. After this correction, you are now going to trade this impulse. I'm going to add something for you. Just because you guys are subscribing and you are liking what we do here, we will add a lot of things for you. Even without you visiting our website, you gain a lot of knowledge here. If this corrective structure, guys, look at it. If you have a push down break structure and you have a push up, if this corrective structure, guys, take this level to the downside, then this has ceased to qualify as an impulse. It is not qualified as an impulse because the rule is that the beginning of an impulse must not be taken. So once this guy is taken, then this becomes a part of a corrective structure. This becomes A, this becomes B. You now need this to either come here or to end here. If you break this level of A, it becomes expanding flat to the downside. And then if he refuses to break that level, but rather stop down here, it becomes a running flat to the downside. But of course, the best that we know how to trade or that we love to trade is a regular flat and expanding flat. We love to see this come this way, break this structure from here, we now make a move to the downside. I am not telling you this is what BTC will do, but I'm telling you how the waves evolve stage by stage, pattern by pattern, and how we recognize them. And that is why in every 10 forecasts that we make, be rest assured that 7, 8, or 9 will be inch perfect. Is that okay now? So let's go to last but not the least, let's go to indices. If you look at indices on the weekly time frame, you see at this point that we completed our regular flat, we have forecasted that for indices, it's a move to the upside. And you can see, let's see on the daily time frame, you can see it has made a little corrective structure, okay, a little corrective structure. But let's see the structure clearly on 4 hours time frame. This was your opportunity for in the week after you have a break of structure to the upside. You have with A, you have with B, you have with C. Wave C has come to cut the beginning of wave, the end of wave A, and this wave B here. This is A, this is B, this is C. This wave B here has cut the beginning of wave A. So this is what? Expanding flat. Expanding flat. After expanding flat from this level, you should have a move to the upside to break this top. How do you enter this market? How do you make your buy entry, guys? I go to 15 minutes time frame, guys. Okay. Watch what will happen. Even as this market is going down to the downside, as it's going down this way, if you check your MACD or your RSI, you will see that there will be a divergence. Okay, can you see? A divergence is appearing. Lower low, lower low, lower low here. Low, lower low, lower low. And right here, you have the low, higher low, and higher low. This is a divergence. So after seeing this divergence, you know that that move to the upside is coming. So right here, you have this, and what do you have here? A break of structure. Every impulse, correct impulse, must break structure. After break of structure, what do you need to see? Corrective structure A, B, and C. So this will have been your trade. I didn't take this stop loss below here. I didn't take this, but I'm just showing you the analysis. All right. Right here, begin to watch break of structure with A, with B. How do you get this? With B, A, B, and sorry. Let me use this. This with A, very sharp. B, 1, 2, and 3. and then with C to break this low. This is an expanding flat. Can you see the beginning? Can you see 3 p.m. GMT plus 1? That is 2 hours into New York session. This is a move to the upside. You break structure here. You break another structure here. This is A, which is just a pullback, which is a part of the corrective structure. This is B and this is C. This is what is called a running flat for a move to the upside. But I don't trade a running flat. It's very difficult to trade. Regular flat and expanding flat are much more easier to trade without mistake. The reason why you cannot trade running flats like that or a contracting flat is because these two types of flat they transform to another flat. For instance, this running flat can as well move down after making a pullback, can just move down like this and has turned to what? Expanding flat. And you'll have put your stop loss right here. So you'll have lost this trade. Do you understand? You'll have lost this trade. The same thing, contracting flat. Okay, cannot break the top, cannot break the low. This is a contracting flat. For what? For an upside. So if you decide to take the buy from here and put stop loss here, what if you decide to now come right here to break this low? This becomes a regular flat. So a contracting flat can easily transform to a regular flat, and then running flat can easily transform to expanding flat. So instead of us to to run into losses, we decided to just avoid running flat and contracting flat. We focus on expanding flat and regular flat. These are flats that are very definitive in terms of their formation. So that is what we focus on when we want to trade. All right. But after you have focused on this and you have understood how to do the forecasting, I've also showed you how you enter the market, how you make your entry. All right. It's very easy how you make your entry. If 15 minutes is not your entry time frame, repeat the same process that I've just showed you on your 15 minutes time frame. All right. If 5 minutes is your entry time frame, repeat the process there. I have used 4 hours for you for my forecasting. Okay. If you are using an hour or 15 minutes or 30 minutes for your forecasting, go ahead and repeat the same process that I've given you. The only thing is that you are more likely to see more structure than I do. Okay. And by you seeing more structure, you are going to trade more than I do, and I'm going to trade less. Is that okay now? But in all, what is important is risk management. You must not over leverage. You must not risk too high. Okay. You must risk what you can afford to lose. And of course, you should remember that there are 5 outcomes you can get from a setup, from your trade. You can either get big win or big loss, small loss or big loss, and then break even. 5. Big win, small win, big loss, small loss, and break even. What is forbidden in these 5 outcomes is big loss. If you can avoid big loss in your trading, then the probability of you to stay consistent in profitability and remain in business for a long time is there. That if you avoid big loss, even if by any reason you are having losing streaks, it will take a longer time for you to blow your account. That is the reality of this business. That is the reality of the game. And whoever does not accept this reality cannot make progress in trading business. I therefore beseech you today to accept this reality. Thank you for watching, guys. See you next week. Bye.